Mikey, yay!
Perfect timing.
He heard me breathe. I'm like, holy shit, now I can breathe. Mike's here.
Okay.
So I'm like, I have no idea about any of this stuff. I kind of understand, but at the same time, like you, Andre, and Mikey, pick it up from here because that's all I see with a bunch of this. Oh, Comcast is going to come in and buy Discovery and Warner Brothers, and they only have enough movie to promote 3 movies for the rest of the year. That's why they're doing that. And I call the biggest bullshit in the world on some of that stuff. So, Mikey,
Joey, I think, is right here. Yeah, it's the people pushing ESPN.
Please explain this to me, and then
Mikey,
explain this to me where this is coming from. Yeah,
from accounting perspective, this is a little bit more your world. I see that if there's merit to this, it's explosive.
Yeah. So there, first of all, that there is a lawsuit filed means that there is an incredible amount of merit. This is not, say, a private fund where it's a guy in his, GoFundMe start, where it's like, little $5,000-$10,000, investors in a private fund, and they're bitching and complaining, and they want, like happens with Disney and some of these other companies where you have these small little funds that are bitching, whining, complaining, sometimes rightfully so, against woke stuff or this stuff or that stuff. This is a serious thing. This came across my desk. I think this happened yesterday or the night before when I heard about it, because I'm going to come at it from the audit finance perspective. So let's take a step back here and what's happening. So the Illinois police, so police officers and public employees have retirement plans. Okay, they have these very well-funded retirement plans by the cities, counties, states in which they work. And in this case, and they rely on these pensions to not have so much stock that goes up and down, but have stock that's stable and that hopefully goes up over time, but more importantly, issues dividends to the people that own that stock. So what we have here is we have the police pension board, which it's a board of people that manages the money of the retirement plans for this Illinois police pension fund. And what they're saying is, say, look, when you guys put this deal together, you told us that it had a certain valuation. You made representations to us about where this company was at in terms of, in this case, subscribers, revenue, etc. And you made some representations, even though in the stock documents it always says that results are never guaranteed because a million things can always happen. But representations were made, and based upon those representations, when this deal was put together, we, the pension fund, bought your Class C shares because we wanted to invest in this venture, in this publicly traded venture. Now, when you're a publicly traded venture and you put deals like this together, you're subject to the Securities and Exchange Commission. And when you're subject to the Securities and Exchange Commission, you're subject to all kinds of materiality representation issues. Now, the word that you were having a hard time pronouncing or whatever earlier has to do with the fact that it gets to what that quote was, which just says that this is a company that was out there willy-nilly spending money in order to prop up the value of the stock of this company by inflating possibly the number of subs that it had, possibly also inflating the number of paying subs that it had, in order to get people like us, because I'm talking on behalf of the police pension board right now. I'm talking like as if I were their auditor. I would say, like, you told us that this was a venture worth investing in. We invested, but we invested based upon you're telling us what the subscriber count was and basically misleading us as to whether or not that sub count was real and whether or not that sub count actually had money behind it in terms of whether or not they were paid subscriptions. We think that you misrepresented the value so that when we bought in at the price that we bought, you guys made misrepresentations and we probably overpaid. Or had we known what was really going on in this company where they're spending money willy-nilly in order to prop up the value of HBO Max and whatnot, we might never put our money in this thing at all. And if we look at the price of the stock ticker, I think that is what also is, they were expecting this thing to go north by 10, 20, 30%. It hasn't. It's stalled out. It's lower value than probably they bought in, or definitely what they expected.
It's half what it was.
Right. And so now because of that, they're like, look, we came in and we put in X number of hundreds of millions. I don't know how much they put in. I didn't research that yet. But let's just say they came in and put in, whatever, $500 billion worth of stock, whatever it is. It's a significant number. They now, by me buying in, or us buying in, and again, I'm talking on behalf of the Illinois Police Pension Board, by us buying in, you took the money we put on the table for your venture that you said was worth X and was probably going to grow to X plus Y percentage. And now the money we put on the table, which are police pension money, retirement money, that value has now been cut, if culture says the price is half, by half. In order for this thing to have gone to in order for a suit to be filed, they've already had auditors much better than me and much more experienced than me. They've already had people take the lead on this thing and do the due diligence so that there's merit to this case. And what they're doing is they're signaling out to the marketplace by saying there's hundreds or thousands of other people that are doing. That means that anybody who is an HBO, who's a stockholder, they want them to join in what's going to be called a class action lawsuit. A class action lawsuit is where literally Tom, Dick, well, I don't mean our Tom, but any Tom, Dick, or Jane, or Harry, or Mary, or whatever, who owns stock that signed up for this thing based upon that, based upon this offering, now can join this lawsuit. And now we've got a major problem on our hands at this company, because this is not going to go away. This is not something like it's some like Brie Larson or, you know, or it's not going to be like some movie star bitching that she didn't get paid. This is serious shit. This is a public pension fund filing a lawsuit saying that there are misrepresentations. Now, I think what Tom said is right. If I'm David Zaslav, I'm going to push this back and say, hey, I came in, I'm the executive. Whatever representations were made, we got to go back to the investment bank that put this thing together and go talk to AT&T. And it's their problem, not mine. That's what I would do if I were Zaslav. Questions?
A million, but I don't know if we have the time. Go ahead, Culture.
I mean, was that helpful or not?
No, it was 100%, and I think you're right. I think that both Zaslav and Weidenfels are probably going to ask out of this and say, "Look, those numbers were presented to us in good faith by Warner Media, which was owned by AT&T at the time, the Reverse Morris Trust." You would have to imagine everybody did due diligence, because that kind of spinoff takes a lot of manipulation, as you know, because it's the tax benefits. You pursue a merger that way, you know, with that spinoff merger thing. You would have to also note that the primary shareholder in in Discovery at the time, and still is actually, is John Malone, one of the richest people in the world, you know, and notice his name's not a part of this. You know, in fact, they're not going after any board members of the previous company either. So, I
think what this reminds, I'm sorry, Culture, I don't want to interrupt you. I'm sorry.
No, you're fine.
Okay. What this reminds me of what I'm starting to see happen, and I'm referencing, you know, Disney, and I'm referencing this company. I'm looking at what's happened with Netflix, you know, what's happening in the streaming war. Ladies and gentlemen, we've been through this before.
Yeah.
Does anyone know what's that saying? All this has happened before, and all this will happen again.
Yeah, little Battlestar
from Battlestar Galactica. Okay, when did all of this happen? When back in 2001, I remember being a wee little lad doing my little internet gaming. I was already out of college. I was a wee little lad, and I remember the .com explosion, and there were all these companies that everybody was going into the .com shit. Even me, I got recruited to be on something called planetpackaging.com. And all these companies had valuations because they were trying to say, oh, well, we've got this number of hits on our website. That was the big word back then, hits on the website. And they had all this valuation. And what happened over time? What happened over time is that earnings mattered, price per share value mattered, and whether or not there was any cash flow or returns to investors mattered. You know, what we're complaining about now about people being woke and about the streaming wars is not too different than that. It is perceived value in something that only has hot air. And what's going to happen, and it's already started, is that whether it's Netflix, whether it's Disney, whether it's this, and I'm a shareholder in a lot of these companies. So I've been beat up, you know, in terms of stock price, and I'm really following all this shit as a shareholder. What's going to happen is that I'm sure there's plenty of lying about subs. There's plenty of lying about views. There's plenty of lying about all kinds of stuff, because starting with our buddy Bob Iger, who decided that, you know, the value of a company needed to be in some perceived value of something called Disney Plus, which we're finding out very easily as a shell game. when all of that started and everybody decided to do the streaming wars, it's all going to settle back to what you, Culture, and you, Tom, talk about on so many live streams, is that at the end of the day, we're going to be right back to some kind of mixed use delivery, internet-based bundled model where we're going to get all of our stuff back the way we've always gotten it on cable. And if this is starting now with this lawsuit, this is very different than what's happened before. Now we've got a public pension board looking at this. And if it's starting here, get ready, ladies and gentlemen, because the cracks could be evident. We want to return out of woke. We want to leave this ESG stuff. Well, guess what? Stuff like this is the little trimmer that might start a bunch of earthquakes that will finally make the house of ESG and woke fall.
Well, they need to. Well, we will know that when we see private equity money leave these media companies, but that's not happened yet. It would have to, like I said, I think the next target should be Disney for anybody who's invested in any pension fund or anything, because they've misrepresented the value of subscribers in comparison to the average revenue per user and a whole lot of other things, and I guarantee you misleading statements have been made all along the way, including, where there was a statement of fact made by Chapek about whether or not they had a political direction or not. I mean, there's a lot going on that people could point to. I'm not sure that one would stick, but there is a lot there, and we'll see. Go ahead, Tom.
My big question, Mike, is because this almost sounds like, because the way you're explaining it to me, and please correct me if I'm wrong, obviously, but trying to wrap my head around all this numbers stuff and all the stuff you just tried to explain, it almost sounds like this pension, what is it, a pension collective or whatever.
It's a pension. It's a pension board.
It's a pension board. Yeah, that they're basically accusing them of conspiring, at least between AT&T and Warner Brothers. Because here's where I'm stretching, because this sounds like they were former Discovery. They used to have, if I'm reading it right,
Discovery shareholders.
They were former Discovery shareholders who got new shares. In this company. And they're claiming that they were duped. So wouldn't that basically, as blah blah puts here, put Zaslav off the hook and Discovery off the hook?
I would say Zaslav is 100% off the hook, and Discovery is just like, what the hell?
Yeah, I'm actually looking at it going, they targeted the wrong two people here, but that's just again, I'm not a lawyer, but I get involved in this kind of stuff on the regular, and I think they're going to, both of these gentlemen will ask out and redirect to AT&T because this is not directed at the right parties. Now, if there's more parties involved in this, that's a different conversation. But based on what we've been presented here in the way it's been worded in this particular, class action suit, they're saying it was Warner Brothers Discovery that misled shareholders by inflating the subscriber figures for HBO Max. I don't know if that's the case. I think it would have been, in that instance, it would have been AT&T because they own Warner Media at the time that were inflating those numbers.
That's correct.
That's what I was trying to ask. Yeah,
that's correct. But see, the thing is that Zaslav was brought in to manage this. See, the way we got to look at it is that this is now post entity. They're bitching about something that happened before all of this came together, and before Zaslav got, what they're complaining about is something that happened way back when. But Zaslav is now in charge. It's a lot like Tom sells Culture his house. Tom gets in, or Culture gets in there and realizes the plumbing's all jacked up, and there are misrepresentations that the foundation was cracked. And now it's a $100,000 job to fix it. Something is going to come out of this. Could there be a settlement? There could be. But since they bought stock, what's most likely to happen is they're going to have to look at who else is going to join this lawsuit and whether or not they're going to issue more shares. They're going to split the stock. Something's going to come out of this, because for them to buy in and lose half their value and for them to feel confident enough to file a lawsuit, there is nothing frivolous about this. This is something that they're going to have to deal with, and it's not going to help their stock price anytime soon.
Well, I'll be interested to see how it pans out, and hopefully. We did plan, this came on us so quickly that we didn't have a chance to put together anything today like we wanted to. We had reached out to a few people, and we may have to try and plan for something here in the near future to go over this with some other minds who may know a thing or two about the whole thing.
I would definitely invite someone who's see, I'm coming in from the auditor
we need
analysis perspective. You need somebody who's licensed in stocks like Valiant or somebody.
Somebody has this background.
Well, we've got Script Doctor here who might be able to add a little bit more perspective to this, but otherwise, there was other people I did reach out to in the legal YouTube community and a few other places to help us kind of break this down, but they weren't able to make it today. But Script Doctor, you were able to show up. How you doing?
I'm sorry, I slept in because in the middle of the night, 3 of my shelves on the wall just spontaneously collapsed and woke up.
That's called a poltergeist.
Maybe. So I had to clean everything up, redo the shelves, and then went back to bed.
What was on the shelf? The poltergeist might not have liked it.
Star Trek books, Shadow Pulps, some action figures, a couple of screenplays.
That's a sign that they were bad screenplays. No, I'm just kidding.
Or they're jealous.
I can write better than this shit.
Some of them aren't even mine, so you know.
No, I know. I'm just kidding. But no, welcome. How you doing? Other than that,
I'm all right. I did see some of this news pass, and I have to say, this is kind of very peculiar, but I do understand what the previous regime did, because it's what Big Pharma does whenever they do release a new medication. They claim the value is this, then they sell it for X, and then years later you find out, oh, they didn't actually spend all the money they quote unquote said they spent to develop this drug.
that is actually an amazingly excellent example. Good job, Script. Seriously, that is totally on point.
Didn't help me too much, but thank you.
To break it down, it's basically private company reads a paper of a new discovery from a university or another privately funded institution that has published their discovery, and they say, can we do this on our own and cheaper, and change a couple of the ingredients that give the same result? And then their R&D team says yes, and then they do it, and it usually happens in a minute fraction of the time. And then they take that cost to achieve that result, and then add the cost of what the original discovery was that was paid by someone else from another company. Yep. They roll it together, and they say that's how they imply that's how much they spent to create that drug, and then they use that as the price point to quote unquote make a profit. What they're doing is they're conflating value with actual expenses.
Yeah,
and that is fraud, and not enough people, sadly, expose that type of stuff. And then what we have here, it looks like either AT&T or maybe even some people at the old Warner Brothers regime tried to pull the same thing with their subscriber count, even though, regardless of the cooking of that books as stated in the article,
right,
their growth is still pretty steady and strong. And it reminds me of the AOL merger, where they flatlined for a little bit on their growth, and then they dropped, and then they did this massive peak. And everybody who was ready to file a lawsuit during that drop just made their money back and then some, and it kept growing and growing and growing. I suspect, because I don't know for sure, but I suspect that's what whoever did this with the HBO Max subscribers and their HBO subscribers and HBO Go subscribers and all that stuff was hoping on or betting on. And because markets work faster than they did 23 years ago, I think they were not happy, or they were very surprised to see that it didn't rebound as quickly as expected. And a lot of people are very upset as a result of that.
Mm. Yeah, because I mean, I'm trying to remember, because like we were talking about, Viacom had a similar situation where their stock dropped almost by half. I think it was either earlier this year or late last year. Now, I know Disney had a bit of a dip for a while. Netflix had a huge drop. Now, I'm curious if maybe is there something here maybe they're misinterpreting because of, just the COVID factor hitting Warner Brothers? They haven't had any big hit movies out recently or anything like that. They haven't had a lot to release as far as that goes. I mean, I haven't heard of any huge number of people dropping off of, HBO Max or anything like that from Culture or anything like that. No,
if anything, and Script said it, they've had fairly decent growth.
I guess, yeah. My question being then, is this some just kind of natural hiccup in just the progression of the COVID that it's just finally hitting Warner's?
No, hold on. So let's go back to where I started with my comments.
Right.
And I'm going to dovetail off of what Script said. you've got a pension. When I'm the pension fund. Okay, I'm going to play that role. I bought into this deal at X stock price, expecting it was going to go up to X plus Y%. And here I'm sitting, and I've got a number that ain't X, and sure as hell ain't X plus whatever anticipated percent. And I've got, in my view, some kind of material evidence, one way or the other, that I think is good enough that I can go to court to prove that that value, the bill of goods that I was sold, was not correct, which means that I never should have believed that it was ever going to go to that, because had I known what I know now, I would never have bought in.
So, okay. All right. So it's still HBO and AT&T who are on the hook for this, is what I'm hearing.
Yes, sir.
Yeah,
okay.
It would be technically them. It'd be technically them for now until they can go through all of their paperwork and find out who authorized the strategy.
Yep.
So basically, you would have, 4 trials to do this? The first trial to make sure, are these the companies responsible? Yes. Okay. Second trial would be who in the company is responsible that's still there, and then who's the person in the company that was responsible that's no longer there. What were the reasons for their termination? Were that supposed to be disclosed to the stock people who are invested in the stocks? Yeah, because basically one of the things with stocks is that you're sold on the projections, and the projections are not guaranteed, but depending on how strong that projection is, will determine whether or not the client buys. And if that projection can be proved to have been misleading deliberately, then you've got a very valid claim. If it looked feasible according to the markets at the time, and looks like basically they just didn't, all the predictions seemed to correct, but the market just decided to go into a different direction. Like, for instance, if like how the internet market kind of made a hard right turn after September 11th, 2001. Everybody lost a lot of money as a result of that, because essentially the country was going to war, or at least under the debate of war. So that happened, and that was unable to be accounted for. But unfortunately, we don't really have a variable like that, because all of these streaming services occurred post the start of the pandemic, technically. There's some very interesting third-party aspects to consider, but I don't think they have enough of a defense for Warner Brothers, HBO, because all these deals, all these things happen. They happened before the pandemic really took off, but it was also happening during a lot of the transactions happened during the pandemic itself.
Yeah, well,
so
culture
that was already a factor.
Culture has to leave us. So, did you have anything real quick, Culture, that you had to plug?
No,
I do have a question now for Mikey.
I strongly suspect that they will try to change the defendants on this to the right people, unless they're claiming essentially, fraud from Zaslav when he was operating Discovery prior to the merger. I mean, that maybe that's what they're thinking, but even in their due diligence process, if they were misled by AT&T, that would be a completely different thing. So
that actually leads to my question, believe it or not, Culture. So I guess I'll just ask it real quick before you head out. Because that's my thing here is, wouldn't this, because here's the thing, if they're right in their accusation about this, wouldn't that also benefit Discovery to say, hey, yeah, they lied to us, right? Like, wouldn't you think that Discovery would have discovered this sooner, and they would have been a part of this, going, wait a minute, you guys cooked your books here, this is not right.
That's part of the due diligence process, right?
Yeah.
And so, and Mike said that they probably had a pretty decent team of auditors involved in this from the beginning. But if AT&T via Warner Media, which was the entity that this thing spun out of, they would have had to have disclosed this information. So if they disclosed information that was not correct, that wasn't material fact, right? Because that's the magical word in court, legal stuff. Then that's a real problem. They could just basically say, you know what, AT&T lied. They combined numbers that didn't exist. People that were using because honestly, at one point in time, and this is something that we commented on going back several years before this merger, was that, you know, HBO Max was HBO at the time was HBO Go, and those numbers were being rolled into what the subscribers were for HBO terrestrially via the cable and satellite.
And they also had HBO Now as well, which was a totally other section.
Yeah, and so, you know, there's a lot of ways that you could spin it. But anyway, I do have to run. All right.
Well, thank you for being here, Culture. But yeah, Mike, on that note, like, yeah, why isn't Discovery in this too? Why don't you think they would have noticed this sooner? That was my initial question.
So one of the things that happens is that when these deals are put together, when companies pay accounting firm, publicly traded companies pick accounting firms to audit their books, and it's generally a pay and play type of deal. You basically, one of the worst kept secrets in accounting is the openness secret, which is that you pay for the audit you get. A lot of times, if an auditor asks questions that the company doesn't like being asked, they'll switch from PricewaterhouseCoopers to Deloitte, from Deloitte to Ernst & Young, and they'll bounce around until they get auditors that play ball. And play ball means operate within the areas of gray with the Securities Exchange Commission. When a company goes and puts a deal like this together, they are putting a best case scenario of they're not uncovering every rock to find out all the cockroaches and all the Euclids that are burying underneath. They're not looking for all the rats in the attic. Instead, what happens is they're basically saying, okay, what is the best case scenario of this thing, and then what can we easily and quickly verify that looks about right, and let's get in there and get this deal done and sell some stock and get this thing going. It's a lot like selling a used car, because that is what these companies were. When this deal was put together, they're putting together a used car. This isn't a new company with a new product offering that has no history. It's a used car. And so what they're doing is they're taking this used car, shining her up, putting her out on the lot, and letting a new driver come on board and drive this car down off the lot, which is what Discovery's doing.
At most, what they'll do is they'll replace the brake pads and maybe a couple of parts inside to make it look a little better.
But they look under the hood and say, "Oh, there's an engine," but they don't really check all the electrical.
It's got 10,000 miles on it, but the odometer says only 4,500.
Yeah. So who knows? We'll see where this thing goes.
Yeah, I guess we're gonna have to wait and see on this, but. Thank you for hopping in here, Mike, to help explain a lot. It does make a little bit more sense to me now. Hopefully it makes more sense to our audience, and I'm sure Andre will clip that out for rewatch. I see a few people were asking about it. Do make sure you're subscribed to the Midnight's Edge After Dark Live archive for that. That's where he drops all.
And I want to emphasize, I'm giving you the perspective of someone who's worked on these types of transactions from an accounting auditing team perspective. Someone else who's coming from a stock buy sell is going to have a very different perspective than I have on this. Certainly someone who's been like a corporate attorney, legal mindset, those guys, they'll have a more different perspective.
Yeah, actually, I reached out to Andrew, and unfortunately, it doesn't seem like he was able to make it today, but he was going to try. But we'll try and set something up soon, especially with like him in VR, and maybe
invite me back if you want
to. Yeah, and you, of course, and some other people who can maybe add a little bit more of a overall idea of what this really entails. Maybe if we hear a little bit more in the future, it'll help clear things up as well. We still haven't heard a response from Warner yet either, and I don't know if they'll necessarily respond to the first initial firing anyway. So